Welcome to the Quality of Earnings Databook Guide. The Databook compiles all the key financial data of a company in one place. In this guide, we'll show you how to navigate and use the Databook model effectively. Before you begin, make sure to click Enable Editing and Enable Content in Excel. This ensures the model can recognize and update with the latest data pulled from Xero or QuickBooks as of the download date. This process can take 2 to 5 minutes, depending on the data size, so feel free to grab a coffee while the data loads. As you scroll down, you'll see the table of contents. The model includes key analyses like quality of earnings and net working capital, along with detailed financials such as the 3 core financial statements. We'll dive deeper into all sections shortly. Note that the model uses USD by default. This will change based on the currency of the underlying data. Now, let's go through the model tab by tab. The Glossary tab provides explanations for all the abbreviations used throughout the model. Next is the AI Account Group tab. This tab shows how the AI organizes account names from Xero or QuickBooks into broader categories, which helps simplify data interpretation and analysis. If you disagree with the AI's grouping during your analysis, please follow the highlighted steps and use the survey link to provide your feedback. Let's now move into the Key Analyses section, starting with the Quality of Earnings assessment. This involves making targeted financial adjustments and applying normalization techniques to refine the analysis, ensuring a more accurate and reliable evaluation. The Q of E report begins with a simplified income statement, followed by auto-calculated definitional adjustments and, lastly, user-entered management and diligence adjustments. To view monthly balances for each schedule, simply use the expand function above. This feature is available on almost every page throughout the model. On the far right, you'll see the annual summaries and growth metrics, with the most recent period presented as the last 12 months, LTM. In the Management and Diligence Adjustment sections, we've set up an automated formulas. To adjust an account, simply select it, and the formula will pull in the monthly values, displaying them as negatives to fully exclude the account from the EBITDA calculation. If you need to apply normalization or make other specific adjustments, you can easily override this by deleting the formula in column E and manually entering the monthly adjustment values. Next, we have the Net Working Capital section, which helps you assess the company's operational liquidity. On the right, unlike the Quality of Earnings tab, the Net Working Capital section not only shows year-end data, but also calculates annual monthly averages to better understand ongoing operational funding needs. The net working capital diligence adjustments work similarly to the quality of earnings adjustments, allowing you to select the account via a drop-down menu. We recommend reviewing the automatically calculated data to confirm it aligns with your assumptions before moving forward. Such adjustments will then reflect in the net working capital recast section below. Further down, you'll find insights on the cash conversion cycle to assess operational efficiency. Lastly, the appendix provides a breakdown of net working capital, reported. It details the reported account balances for net working capital before adjustments, serving as a reference when selecting accounts for adjustments. Let's move on to the Debt and Debt-like Items tab, which include obligations such as loans, leases, deferred payments, or other liabilities that represent future financial commitments. Our model calculates reported debt based on the AI grouping results. For other debt and debt-like items, use the drop-down to select the account. The model will auto-calculate historical amounts, but you can also delete the formula in column E, then enter your custom amounts. Next, in the Graphs tab, you can visualize revenue versus gross profit throughout each month. Revenue and EBITDA trends over the past 2 to 3 years. EBITDA waterfall over the past 3 years. Seasonality analysis of the income statement. Finally, the annual changes in adjusted net working capital and the average net working capital values across different periods. Next are the 3 financial statements. You can also expand the monthly data by clicking the plus icon above. You can also find the annual summary analysis on the right side of each of the 3 financial statements. Adjustments made in the Key Analyses section are reflected in the BS recast and P&L recast. The P&L schedules consist of 4 sections: proof of cash, expense by vendor breakdown, revenue by customer breakdown, and employee expenses breakdown. Proof of cash reconciles financial records with bank statement data to ensure accuracy and consistency. Before you begin, Please scroll down to rows 85 to 96 to enter the bank statement opening balance and the monthly credit and debit amounts. Once you've entered the bank statement data, scroll back to the top to review the comparison results, which include a monthly analysis of revenue versus cumulative bank credit amounts, expenses versus bank debit, and finally, bank statement versus balance sheet ending bank balance. You can also view comparison charts on the far right of this page. Generally, a difference of up to 10% between bank and financial data annual averages is considered acceptable. The expense by vendor and revenue by customer breakdowns highlight the top 10 contacts. If no contacts are recorded in the accounting software, these sections will remain empty. The expense by vendor and revenue by customer breakdowns are divided into two parts. The upper section shows absolute amounts, and the lower section shows percentages. Employee expenses are displayed based on AI grouping results. If you have any concerns, please contact us for adjustments. The balance sheet schedule includes aging reports for accounts payable and accounts receivable. These reports aren't generated automatically and require manual entry. The check section automatically compares with the financial statements, ensuring everything is balanced. That's all for our overview of the model. In the next video, we'll be having a walkthrough on the actual use case of the due diligence databook, wherein we'll show you how we populate the model when we have some adjustment numbers. Thank you for watching.